China has relaxed its COVID controls, making it easier to travel domestically, allowing COVID patients to quarantine at home, and tries its best to keep businesses operating. And as we're moving towards the end of 2022, China's top economic planners are busy laying out policies for next year. Now, these easing of COVID policies is much welcomed, not just by the public, but also by the economy. However, with rising infections in the near term, challenges remain. So we'll talk about today what is next in China's economy. Joining us today are our guests, Jimmy Zhu, Chief Strategist of Fullerton Research. Welcome, Jimmy. Ms. Tao Wang, Head of Asia Economics and Chief China Economics, UBS Investment Bank. Welcome. And Mr. Felix Khew, Country Head, China Dusit Fudu Hotel and Resorts. Welcome to our show, ladies and gentlemen. So the big question is, what is to expect with the relaxing of COVID policies here in China? You know, with a surge in infections, do you think the path to a full reopening would be gradual, or bumpy, or smoother than we had expected? Can I start with the lady, Ms. Wang Tao?
That's a very good question. I think originally, most people, including myself, thought the government will ease policies, ease controls very gradually, using the time to prepare the population for higher vaccination rate, also prepare healthcare facilities and drug treatments and so on and so forth. But I think evidence in the last 2 weeks suggests that developments on the ground are actually happening quite fast. And the government, the authorities are responding also very fast. So measures, almost every other day, there are new measures being announced, and latest were the new 10 measures, so-called, and that effectively ease the most controls, allowing people to be quarantined at home, and also, I think, basically encouraging or asking people not to go to hospitals. In the meantime, of course, they are ramping up vaccination and hospital facilities. So things are happening a bit faster than probably originally planned, and than most people have expected. The process probably will be uneven because cases will inevitably rise as measures ease, and also this the winter months, and infections tend to rise in the winter months. So I think people's attitude and their behavior may still be cautious, but I think this trend, the turning point, is very clear.
Ms. Wang Tao, in an earlier report by you, an article that you wrote back in November, I think, you said something about an earlier than expected reopening could put more pressure on near-term recovery. Do you think that stands?
In early November, when we were forecasting 2023, we made a big assumption that COVID policies will be significantly eased after the National People's Congress meeting, and that actually activities will rebound very sharply after that, from the second quarter onwards. More recently, given the developments, we published another note saying that things are happening faster and earlier than expected. So earlier easing, which is already happening or happening quite fast. We think that actually it have probably two effects. One is that it could bring earlier rebound in consumer activities and in reopening activities than we originally thought. For example, maybe starting already around Chinese New Year. But on the other hand, the easing is happening in the winter months as the cases are rising. So there is a risk that there could be a lot of people getting infected, for example, in factories, in logistics centers and so on. So there is a risk that there could be some short-term disruptions on the supply side based on experience from other economies in their reopening process.
Mm-hmm. And also, let me go to Jimmy now. Jimmy, do you agree? I mean, when would you expect a full reopening would happen?
I think it's pretty like when the central banks raising the rates. When the central banks starts raising the interest rates, like what the Fed did in the beginning of the year, it's just like what we relax the rules now. But in futures, I think there's no timetable here. It's just like what the central bank is doing. I think there's two variants here. The uncertainties here. First is, I think now just Wang Tao mentioned that it's a winter period. Most of the countries, actually, what I observe is they open at summer or spring period. So probably at that time, the things will be more stable. But on the other side, I think we will have the Chinese New Year, the Lunar New Year holiday, which is coming in 1 month time. So I think these two things probably will make the case increasing pretty fast than what we early expected. So regarding the fully open, I think the officials definitely need some time, at least 2 to 3 months to observe first. By the most optimism, I think probably they will lose the control or fully reopen probably early second quarters. I think that's possible. But the most important thing is from now to the virus reach the peak. I think this period is very important. Is very important because the authority they need to monitor the health conditions and the public conditions and also its impact on the economy no matter from the positive side or slightly more negative side. So I think there's a lot of things we still need to be monitored and how to educate the public about all the things.
Jimmy, you talked about the coming holiday season. Do you think that mobility would increase or decline in this upcoming New Year and Spring Festival?
Frankly speaking, I think a lot of people will still travel. It's very hard to say because the country is so big. But I think the traditional people like to back to their hometown in the Chinese New Year period. So I think at this moment, the official is also very important to give the public education about if you caught the virus and how to protect yourself. So I think the crowd probably would be pretty similar as last year. I don't see that there will be much changes.
Okay, let me go to Felix now. Felix, in the upcoming holiday season, do you expect to see a rebounding business in your hotels and resorts?
Yes, I think in our hospitality industry for the past 2 years and 11 months, like many other industries have been suffering because people cannot travel. For this year, in couple of public holiday like National Days or May holiday, we see the rebound. But for this time, the news, the change of policy came quite fast. In 2 days, you can see so many new policy coming in. And actually, yesterday we had a live streaming program online. So there are more people coming into our live streaming session to watch our sales on rooms, vouchers, and also some spa voucher, F&B voucher, and all this. So we see there is a lot of demand on this part. And of course, like what Jimmy and Ms. Tao said, people are still wary and people are still wants to see what is happening in coming months. Will there be a lot of infected cases, which the likeliness is quite high. So people are still wary. So we are not adjusting our rate or whatever yet. So we just have to watch and see for these 2 weeks, on hotel bookings.
What do you think are the key advantages that Chinese mainland has in its path to reopening?
So now I think Omicron is probably less dangerous than other variants that's expert says, right? So when China opens, the death rate is likely to be lower than the previous variant, and also I think China, of course, as I said, the elderly vaccination rate is higher. But in terms of the economy, I think one thing that it's the domestic demand is obviously the dominant part. So domestic consumption has been held up, and saving, there has been excess saving, involuntary saving, because people are physically restricted. And now with the easing, obviously people are going to go out and spend a bit more. So consumption will rebound quite sharply. As consumption rebound, I think a lot of the SMEs, small shops that have been closed for so long in the last couple of years, will be able to gradually reopen. That then will support employment and income and then sustain the consumption. And also, I think the timing of China's reopening and recovery coincides with a slowdown in the global economy. The positive thing of that is that China's rebound and reopening is not going to lead to higher energy prices and higher commodity prices. So inflationary worry is going to be less compared to when US and Europe opened up.
That's a good point. And let me move on to Jimmy. Just a follow-up as my discussion with Wang Tao just now. What is your expectation on the upcoming economic rebound as compared with maybe the second half of 2020? Do you think we're going to have as strong rebound this time around? And also, Wang Tao did mention China's opening up would actually try to keep inflation at a more stable and reasonable range. Do you agree with that? And what would be the impact on China's full reopening on the global economy?
Regarding the recovery speed compared to 2020, I think there will be some similar pattern, but I think it's also got a disadvantage. Why the similar pattern? I expect a quick rebound because the pent-up demand is there. I mean, now the China GDP, more than 50%, 60% are from the service. So because the past 12 months and the past 6 months, the restrictions, which is really restrict a lot of, especially the shops in the in the mall, and also lots of the small company, they find the logistic issues or they have to close. I think the confidence-wise, it will be much more improved from here because the pent-up demand from the consumer side are very strong. But there's also some problem is in the 2020, actually the lockdown in lots of cities or the COVID restrictions, it's only lasts for about 2 to 3 months. So lots of things are recovered pretty fast. But now some restrictions in some city probably already on and off be quite some time already. So I think on that part, it also takes some time to recover. On the global environment, Wang Tao just mentioned that it's also probably not so becomes not so easier at this moment because when the 2020, lots of central banks and the policymakers around the world at that time just used the monetary stimulus to stimulate the economy and making the global economy, the demand is very strong. But at this moment, I think lots of especially the countries in the West, like US or Eurozone, lots of countries probably facing the recession risk next year. So the external demands, I think, is one of the challenges for China next year, though we are gradually reopen. So on that side, I think we have to rely on the domestic side, on the domestic demand to boost the economy. One is, of course, the consumption. And the second, I think it's also probably the authority will start to carry on to relax the rules, the properties sectors. I think that is also one of the very important drive to support the Chinese economy next year.
So what is your expectation? What's going to happen with the property sector, let's say in the near term?
Well, I think there are some chances for the property sectors to recover. The first is, I think, after relax the COVID rules, the demand is, and then also the consumptions will start to pick up. The people's confidence is also going to improve. And number two is the property sectors in China has already in a very so-called the momentum is also a bit weak at this moment. So from that level to recover, I think probably it's not so difficult. I don't expect the property sectors probably will recover until like the past 10 years, but I think there's a pretty good chance that the momentum and the sales, especially from the secondary market, probably will be much better compared to the environment in the past 2 years.
Oh, Jimmy, just briefly, what is your outlook for CPI? Because we talked about possible increase of prices.
Yeah, one of the main reasons of the CPI in the past 2 years from the other countries like in the US and the Eurozone because of the rising energy prices, stimulus. But I think one of the key things is they are really short of the supply chain is really in a shortage condition. So I think at this moment, there's still no spike in the China CPI outlook at this moment, even probably because of the virus case increasing in the coming few months. But I don't think it will bring a very substantial changes to the China supply chain issue. So I think the CPI for next year, I think probably it will still hovering around 2.5 to 3% in this range.
Okay, that should be good news for Felix as a business operator, hearing that if prices are not going up that high. Do you think that hospitality industry would also not see prices shooting through the roof in the next few months? I mean, even with demand rebounding so strongly?
For our industry, because the Chinese population base is so big, so they tend to have people who wants to travel, and because of all this new policy coming out, we are quite optimistic. We see the light at the end of the tunnels. Previously, we might have some small meeting groups coming to our resorts, but because of the restrictions, so they are cancellation at the last minute. And also we cater for family leisure trips, but because the kids cannot leave their city, so we have to face all this cancellation. But coming to these situations, we see there are more inquiries coming in terms of bookings and all these things, but we don't see the price to surge so fast yet, because in our industry, we practice this revenue management. So we have to see the booking pace. So it is still a bit earlier to say, the price will surge to the roof or not. We have to see for next week, what are the demands coming in. And prior to this, also, we are hotel operators, so we sign new contracts. I am quite surprised that for these past 2 months, I see quite a number of inquiries coming in to manage the hotels or with building new hotels. So I think at coming to 3rd years of this restriction, I think people also seeing some new positive coming in. So all to all, I think it's quite a positive trend.
All right, so Felix, in the relaxing of COVID rules, you would definitely see that as a sign, and that's something going to boost your confidence in business, right?
Yeah, correct.
Yeah. May I ask you about your company's performance in the first 2 years of the pandemic? Let's say the second half of 2020 and 2021. Was it? How would you compare that with your peers globally?
In the first year, 2020, because our holding company is from Bangkok, Thailand. You see, in the first year in China, we are doing quite well compared to overseas market because of the government's actions in controlling the spread. And while overseas, they are having a serious impact. And then coming to 2021, overseas market has started to improve a bit, although they are not better than 2019. But because of our restrictions in China, so our business for last year and this year have been affected quite a lot. People cannot travel. People are doing online meetings and so on and so forth. The kids cannot leave their cities because when we do leisure business, kids are the decision maker actually going for holidays. So a lot of our hotels has been affected a lot. Not only us, I think the whole industries, sometimes we face single digits occupancy for, maybe 1 month or 2 months down the road. We also have like hotel has to be closed because there are cases happening and all this. So I think things will change in coming months. I guess in coming Chinese New Year's, the booking will be going high.
All right, let me go to Ms. Wang Tao now. Wang Tao, what do you think could be measures and policies being put in place that could be further promoting business confidence, especially overseas or foreign businesses here in China? And also, I would like to get your take on the outlook of CPI.
Sure. Maybe I start with the CPI. So I think I agree with Jimmy on this. So we have a similar outlook. I actually think that services price will go up as reopening happens, because the service sector, like the hotel sector and the airline sector, have suffered so much. They were in retrenchment in the last couple of years, and now demand going up. I think they are about to enjoy some, pricing power, some price increase, right? That's just natural. And also in China, food prices is on the rise. Pork cycle is on the up leg now, and it will continue to rise. However, I think given how weak property sector is, PPI has turned negative. That means the upstream prices are not so strong. So there's not much of a cost push. And energy prices have come down and will be lower next year compared to this year. So that's actually good news for downstream operators like hotels or, like some of the services and also some of these manufacturing sectors. So our inflation expectation, CPI, we're actually a bit weaker. We see it at 2 to 2.5% on average in the beginning of next year. Because of the base effect, it will be higher, but later it will come down a bit. So in terms of our outlook, what else can boost confidence and what else are the key drivers? I think actually the government has recently implemented or rolled out two very important policy initiatives. One is about easing COVID policy. And by now, especially after new measures announced on Wednesday, they are largely open. So nobody talks about zero COVID, nobody talks about lockdown anymore. Maybe the final reopening will happen later after the Chinese New Year, but it's largely open. And so that's very supportive of business and consumer confidence. The second one is property easing measures. And the 16 measures announced 3 weeks ago signifies a turning point in the sector, and also a turning point for the way the governments have been looking at the sector. Easy measures are coming through. With the help of COVID easy measures, we think consumer purchasing demand will pick up, but also for the developers, their financing are going to improve. And so construction will rebound. Our expectation is that things will stabilize in the next 2-3 months and then start to rebound from March, April onwards. So that's very important. The third one, I think, is that the government is going to have an economic work conference very soon, and that they're going to, they have already, the Politburo meeting has already said that, stabilizing the economy and boosting growth will be very important. Fiscal policy will be very supportive. Just about an hour ago, there has been an announcement that there's a special treasury bond issuance of 750 billion RMB. So I think those measures basically continue the government support will be very helpful. And finally, I think that a stabilization and normalization of regulations in the industry next year, which we expect to happen, will also help boost business confidence.
Well, what other tools do you think the PBOC has in its pockets to support economic recovery?
Well, so for next year, I don't think monetary policy is really the main tool. Unlike in the West, I think, and also unlike in other countries, I think the monetary policy is not being used very aggressively in China, and that is, I think, pretty appropriate. At the moment, so the most important tool is actually fiscal policy from a macro point of view. I think fiscal policy will continue to be supportive, spending more on infrastructure. I hope they can also support consumers and small businesses. I don't know if that's going to happen. On the monetary side, I think PBC will not likely to cut interest rate, given the fact that the Fed continues to raise rate and the exchange rate, has depreciated a little bit. But the PBC, of course, can use the on-lending facilities and triple R cut to increase liquidity. They also use window guidance and also basically ensure credit growth is stable. So they use another tool and change the money multiplier. That's a very Chinese characteristic of
Yes.
monetary and credit policy.
Yes, thank you. Let me go to Jimmy now. Jimmy, what would you say are the highlights in economic efforts, growth efforts in China during 2020 and 2021?
In the past 2 years, I think the economy was still pretty strong at this moment, actually, at that time. Compared with lots of other major economy, I think China still scored very impressive growth, the GDP rates, especially in 2020, when lots of countries are still in the negative growth, and because we control the pandemic pretty efficient at that time. So we create lots of domestic demands. Also, we export lots of products to overseas at that time to bring lots of growth to the countries. And also, I think the past 2 years, I think consumption are still pretty resilient at this moment. I mean, in general, in the past 2 years. Recently, we saw the consumption a bit slow. I don't think it's really because of the demand is a really slump, but I think more or less it's because of the COVID measures that restrict the people to purchase the thing. Moving forwards, I think for next year, I most of the thing I pretty agree with Wang Tao that the monetary stance, the policy probably will play a small role, but I think it will be more targeted and more forceful. If the central authority probably want to give more support to the growth, probably it will consider one cut probably in the LPR 5-year tenor. I think it's still possible, but on the other side, I think provide the liquidity, especially to the SME and the real economy after the COVID cases are being calmed down. I think it's still very necessary. So for next year, I think fiscal policy really plays a very important role to continue to support the domestic economy.
Yeah, speaking of providing support for small and especially micro-sized businesses, I mean, these are the ones that have been pretty battered this year with rising infections across the country. What do you think that they really need at the moment from the financial sector?
The business loan is very important, especially for SME. If the shops are be affected, the business be affected to 2 or 3 months, I think their cash flow really will face lots of problems compared to the bigger companies. So especially, I think continue to provide the financial support and even the interest rate, a slightly lower interest rate loan to them, I think are very important to. It's a very effective measures to boost the confidence among these people. And also, I think there's at least about 70 to 80% of the people in China working for private firms, and lots of them are SMEs. So if the SMEs are running effectively, I mean, in the next year, I think it's also very efficient to boost the consumers' confidence.
And speaking of what's going to happen next year, Ms. Wang Tao, may I get your outlook for next year? Well, this year, we only have a bit more than, let's say, 2 weeks to go before we call it an end. So what would be your outlook for growth, let's say, for 2022 and 2023?
For 2022, yes, we only have a couple of weeks, but November data is not out. We've been really monitoring the high frequency data of people traffic, and November looks pretty bad. So fourth quarter probably will be weak compared to third quarter for the year, probably around 3% growth for 2022. For next year, as Jimmy also mentioned, we have some downward pressure from the external side. So that's going to offset a lot of the rebound. So our forecast, UBS forecast for next year is growth rebounding to 4.5%, maybe a little stronger. There's a bit of upside now with the easing of COVID restriction a bit faster.
Felix, what would be your outlook for where your business would be going next year? Maybe I don't know if it's okay for you to talk about growth target or just a range.
Actually, we just finished our budget for next year with some of our hotels owners. And because this good news came too fast, so some of our owners already mentioned to us that you should revise your budget for next year. And then we told them that, just wait a while and see what will happen in next 2 to 3 weeks first, then we may have to do another forecast. I think this is a good thing. And also from hotel operator points of view, like in China, 80% of hotel properties belongs to property developers. So when Ms. Wang talked about the easings of some of the liquidity for the property developers. So that's why I received quite a number of inquiries for building new hotels, new resorts recently. So for next year, definitely we have to revise our budget upwards, because we see the lights at the end of the tunnel.
All right. Ms. Wang Tao, so I would like to get your comment on China's economic performance during the first 2 years of the pandemic.
During the first 2 years, I think, Jimmy summarized it quite well in that I think in 2020, China was the first entering the pandemic, but also the first to get out that wave. And so that reopening from the second quarter onwards was very powerful after a very sharp drop. And then, so China was one of the very few economies and one of the only large economies that actually had registered a positive growth in 2020. So that was then. And of course, the government reacted very quickly with monetary support and fiscal support, special bonds and special treasury bonds and so on in 2020. 21, basically, throughout the year, COVID was controlled and the domestic consumption was relatively okay, but 2021 was also a year driven very much by export demand. Export was super strong because globally people are reopening. China's supply chain was very resilient. When other people faced the supply chain disruptions, China was able to supply to the rest of the world whatever the rest of the world needed. So I think China's performance last year was also pretty good. So this year, of course, with Omicron, it's a very complicated challenge, and the China faced quite a bit of a challenge. Next year, I think we should expect a turnaround.
All right, Jimmy. So in the next few months, we are going to face a lot of uncertainties. Felix mentioned that as well. More importantly, we're going to probably see disruptions in supply chains and even logistics. That's probably already is happening in some parts of the country. What can be done to help businesses to mitigate through that period?
I think based on experience from other cities or countries, I think lots of experience we can refer to. I think the public education thing definitely is the most important things. It has to educate the people that what kind of a category people they need to visit the hospital in what kind of conditions. Otherwise, I think the hospital and the medical supply will be a bit overwhelming. And also, I think because in the next 2 months, I think it's especially very crucial. The uncertainty is what's the speed of the virus spreading would look like. Based on the other cities or countries reopen, I think the case probably might increase a bit higher, and we early expected. Plus, it's a winter season and the Chinese New Year holiday. This is all the factors that some other countries never experienced. But I think doing the educations, like what I mentioned earlier, is the education, like what kind of people need to go to the hospital and wearing the mask in the public or in the high-risk area. I think that's probably even more important than the other things.
Ms. Wang Tao, you talked about the vaccination rate in Hong Kong when you were talking about the Hong Kong experience. Do you think that pushing up the Chinese mainland tries to push up its vaccination rate at this moment is still significant to keep its economic recovery on track?
I think it's vital to increase vaccination rate among the elderly. This is not about economic growth. It's more about saving lives and make people, reduce really the impact of COVID on the livelihood of people, right? And of course, indirectly, it will support the economy because people will feel more confident about going out and not bring things to their family members, their elderly relatives, and so on. So right now, in China, people aged 80 and above, at least having one shot, already 77%. In Hong Kong, in the beginning of the COVID wave, it was something like 20%. So this is significantly higher. But people with booster shot, only 40-some% as of November. I think that needs to go up significantly. The government has already set a target for 90% coverage by end of January. For people aged 80 and above. So I think it's actually very important, and they're going to have to use a lot of encouragement and make it much easier for people to get vaccinated to achieve this goal.
Well, thank you very much. Felix, let me come to you now. In the hotel business, and now we are seeing perspectives of business rebound. What about the change in your customers' demands? I mean, COVID-related ones, for instance, they might want to have more medical care even when they travel and staying at a hotel, and higher standards for sanitary and privacy.
I think our protocols will not change compared to the past, other than, we don't check the health codes, the QR code like the past, whereby the government has removed all this policy. But we advise our hotel, our employee, you still have to wear masks, you still have to wash your hands, just to protect yourself, your family, and also our guests. So it's the same protocol we have, minus all this checking QR code. So that is what we are practicing right now.
What about in the past 3 years? I mean, what are possibly that's something that we can learn from our experience in the past 3 years during the pandemic period that's going to be useful and valuable for us, for your business going forward? In Chinese, when we say the word crisis, 危机, it means both opportunity and risks. So probably even at crisis times, there are new opportunities emerging as well. Felix, what about you in your hospitality business?
During our time, we stay closely in contact with our guests. We have two types of business. One is meeting business, the other is leisure business. So for MICE business, we call it meeting, incentive, convention, and exhibition. So this kind of corporate guests, we stay very close. We have contact from time to time, so that, whenever they want to have meetings, or smaller group, we will try to cater for it, wherever we could. So for the holiday business, for family business, we have our membership program. So we still continue to contact with them. So even though the business is lower, we have crisis like this, but, we maintain the relationship, because China is all about relationship. So when coming to next year, so we will reactivate all these, what do you call it, the contacts. Like, for example, we have 80% of our hotels in Zhejiang and in Jiangsu province. So a lot of business are from Shanghai. So I think by next week, we will start visiting our corporate guests in Shanghai, especially in year-end, whereby a lot of businesses, they have budgets whereby they have not finished using, like, for example, year-end annual dinners and all this, so on and so forth. So we will start tapping on all this business. And then for Chinese New Year, the same thing, we have this called Wei Ya Yuan. So this is what we're going to turn all this previous crisis into future business.
Well, that's great to hear. Jamie, what have you learned as a financial strategist in the past 3 years? I know you learned how to cook during the Shanghai lockdown. Other than that?
Yeah, I think from the financial perspective and the business perspective, from the business perspective, I think it's lots of companies. I think they really learn how to efficiently arrange to start to working at home. I think that is one of the things probably in the next few months, probably more increasing people will also doing the same thing. So they learn how to use the different platform to work, different platform to communicate. Even let's say 20 people in the 20 different houses or different places, things will be still in order. I think that's why observing the Chinese company in the past 2 years. And on the financial market side, I think the good thing is the market already know what's the cycle probably was beginning with and end with. So there will be more prepared for the probably a possible shocking price move. So that will help to ease the volatilities in the next, especially in the next 6 month time.
What do you think that China has learned from the pandemic hit years going forward as we laying out new policies now for the upcoming years?
Well, I think as China move forward, I think there are a few things. During the pandemic, and as there are a lot of restrictions, I think so digitization in China has happened much faster. So a lot of transformation in the economy. So remote working, remote learning, remote healthcare, e-commerce, and a lot of older people who used to be more resistant to using, apps and ordering things are now getting used to it and are more educated about it. And so I think, new businesses development, new forms, new business models are being developed. So that's an important thing. But at the same time, I think what we've learned, not necessarily China, but basically all of us have learned, is that interpersonal contact is still very important, especially for young people. I think, having to stay at home and do remote learning is very problematic for young kids, but also for young people working in the workplace, not observing more their senior staff, senior colleague, what they do, and doing business and so on. It means they don't have a good opportunity of learning by doing either. So and as that's happening, I think going forward, I hope that people will appreciate that personal interactions are very important, also internationally, that can help basically bring more ideas and more understanding of each other, and so that both for businesses, both innovation and also for, I think, multilateral and inter-country relations that also hopefully will improve.
Jimmy, I would like to get your take on the possible impact on the RMB and the renminbi assets going forward.
Yuan already rise above 7 versus the US dollar. I think it's a very positive sign that the people really welcome that kind of policy, the COVID relaxations. Next year, our base case scenario that probably yuan will continue to rise versus the dollar, though the pace will be a bit slow. That's from the dollar perspective, also from the yuan perspective. For the dollar, I think it's very simple that the Fed probably will start raising the rates sometime probably in first half next year. So I think one of the important driver for the dollar will continue to weaken. But on the China side, when US and the Eurozone probably will enter into the recession next year, so I think lots of inflows, actually I expect probably will move into China. So that would definitely give lots of Chinese assets more support. Even China is not really exercising a very aggressive monetary measures, but I think the policy overall, including the fiscal, will be very friendly to the economy-wise. So by end of the next year, I think probably there will be a chance that the yuan will continue to gain versus dollar, and probably it will appreciate to 6.5 in sometime next year.
Mm-hmm. And also, what is the immediate stock market reaction after China easing its COVID policies?
Well, the stocks market already more or less pricing the first phase of the reopening because the price already in a very solid uptrend since the early November. So I think probably the gain will be a bit slow in the coming few months. So one of the two things probably will decide the volume, the trend of the stocks. One, of course, I think it's the virus surging. If the virus continue to rise very quickly in the past, let's say in the next 2 to 3 months. So I think the stocks market probably will take a break, and probably the bond market will outperform. But once we pass the peak level of the virus infection, and based on the model from the different areas, from different models, probably it suggests that by end of first quarter next year, China probably will be able to pass the virus spreading, probably will be able to pass the peak level. So once the consumption and the production is really picking up, especially in the late second quarter or second half, I think there probably will be more scope for the stocks to move even higher.
Mm-hmm. Let me follow up on an earlier question that I shoot you, that you talked about that you think that CPI would remain in a relatively reasonable range and stable in the coming months. However, you talked to me that you are in Singapore right now and you're seeing prices in commodities, in products and services already much higher than where you were there, let's say 2 years ago. Why do you think that is not going to happen to China? Do you think, how do we deal with imported inflation pressure?
Well, there will be very different story compared with China and the US or Europe in 2 years ago. First is we don't have a large scale of the monetary stimulus. When the US is cutting the interest rate all the way to zero, and conduct a very large size of QE together with other major central banks like ECB and the Bank of England. This is not happening in China at this moment. So I think the inflation will pretty be contained at this moment. The second is I don't expect the energy prices and the commodity prices to rise next year, which I think probably the oil prices might even weaken further, given the current global economic conditions. Well, lots of major economy probably will fall into the recession. So when the energy prices or the commodity prices if starts to fall, one of the key pressure on the inflation is also eased. Number three, I think from the domestic side, the recovery probably also earlier Wang Tao mentioned that probably it will only happen in second quarter onwards or second half. So and also I think the recovery will also a bit bumpy and the gradual depends on how the authority to control the virus and how the virus spreading will be. So all in all, I think the inflation still will be pretty well contained around 2.5 to 3%. If there's any demand suddenly picking up or the food prices rise, then it probably will push the inflation to 3%. But anything above, I don't really expect it will happen.
Mm-hmm. All right. Felix, let me come to you now. You talked about your company planning to raise your budget for China, for the Chinese mainland market next year. What would be your piece of advice for, let's say, either a peer or a newcomer in the industry, or a peer that wants to come into the China market now?
Well, next year would be a good year, but you have to have a strategy to come into China because the market are in the reviving moods. So to have a new brands, coming into China is quite challenging at the moment because you have to establish your name in the market. So for new brands coming to markets, maybe you should do some research in the markets, what markets you want to go in, which market segment you want to go in. Either you are in the hotel, business hotel, you are in the resorts kind of business, what kind of target market you need to go in. I would advise that maybe, just wait for maybe another half a year to take a look what is the right trend, for newcomers.
Well, Felix, after the past 3 years, I know the hospitality industry has gone through ups and downs, probably most downs in the past few years. But you stayed here, so I would assume that your answer would be yes to the question that whether the China market still is attractive to your businesses. And nowadays, what do you think are the biggest attractions of the China market to you? I mean, other than the size of the market, what do you see in your customer group?
Okay. We resort operator, and of course we have business hotels. You see, for our target markets, for resort, nowadays there are a lot of Chinese consumers who has actually been to overseas. They have been to many places. They stay in different kind of hotel. They have seen a lot, you see. So they come back to China, they stay in China, they want something with good quality. Right now, our target customer, they are willing to pay premium price for to stay in a good hotel. So it is important that we provide good content for our customer. And also we are venturing into wellness business because after the pandemic, a lot of people has realized that it's not about money, it's about your health, the mobility. So we are exploring into a wellness segment to cater for our guests. We have Thai spa. A lot of our customer who has been to Thailand, they love Thai spa. So we actually have Thai spa in most of our hotels. So our customer will like it, but we will incorporate this wellness into it, so that they can bring their immunizations up, to stay healthy. So this is the directions we are going. Thank you.
Oh, great. So even tiding out some hard times, still businesses are making positive adjustments and changes. And my final question to Jimmy Zhu, what would be your piece of advice for global investors who are betting on China now?
Well, next year, I think the global investment environment will be very tough at this moment because lots of countries are in the late cycle of the economy after the recovery of the pandemic. So I think the stocks prices and the probably will even down further on the global basis. So for China's side, I think the yuan relevant assets is really attractive at this moment because China is still on the very early stage of the recovery. From the history, it shows that no matter what kind of a stocks market it is in China or US in the Eurozone, usually the stocks market tend to gain a lot in the early recovery period. So I think based on the economy probably will continue to grow about 4% next year, but it's still much higher compared to many other economies, especially in the West countries. So I think the yuan assets will probably outperform in the next 12 months at least.
Right. So the Chinese economy is still very attractive for global investors as well. Thank you so much, ladies and gentlemen. That was our guest of the day, Jimmy Zhu, Chief Strategist of Fullerton Research, Ms. Tao Wang, Head of Asia Economics and Chief China Economist, UBS Investment Bank, and Felix Khew, Country Head, China Dusit Fudu Hotel and Resorts. Thank you so much, ladies and gentlemen. Great discussion. Thank you. Goodbye.
Thank you. Bye.